Is it good to invest in Access Value Fund because that is a new NFO coming on September 2nd and going on till September 16th. So more about Access Value Fund and what how these people are going to invest your money. That is what you're going to see today. Hi, hello, this is Ganesh Thuru, your stock market profit coach and author of the book One Page Mutual Fund Plan. And today I'm just going to talk about this Access Value Fund because this is a new category which is coming up, and all rest of the funds also I'll explain what are the other companies, other mutual fund companies having this category, and how this category is going to work, and is it the right time to invest in this NFO, because that is a good question you should ask yourself before choosing an NFO, because this is a critical time, because all the IPOs and NFOs will come only when the market is going up and up and up. And in the last couple of months, if you have noticed, there were almost more than 30,000 crores got collected from all the NFOs alone. And if you include the IPOs from primary market, it is more than 50-60,000 crores, and that's a huge sum of money, I will say, which is coming at a critical juncture. That is the reason stock market is going up and up and up at this time. What is the value this fund is going to provide? Because this category itself is called as Access Value Fund, because value fund is something unique, and because only when you find a value, if it is less than the average, the ratios are there, I'll explain more about it in the showing the presentation. And only when the stock is available at good value, the investor, the fund manager, is going to put your money, and he is going to have a tough time, and they're launching the fund, which means they are trying to see a value in the category in the stock market. Let's look at the fund, and the NFO is between, as I said, between September 2nd to September 16th. Let's look at the valuation front of this fund. Okay, so this is the Access Value Fund. Let's look at this category, and the fund is going to start. And what is value investing? Because the simple definition as per this is that invest in anyone who is investing when the low PE stocks is a value investor. According to stock market, that is the value investing. But the broad definition is they are investors interested in buying stocks for less than what they are worth. Say you go to a supermarket and the stock is worth, and the t-shirt is worth around 500 rupees, and it is available at 1+1 offer. It means you're going to get for 500 rupees, you're going to get t-shirts worth 1000 rupees, and you will go for it, right? And that is the kind of stocks this fund is going to aiming to buy, and that is what the fund manager is going to do. And what are the passive screeners? Different phases of value investing. This is what they're saying. They are called as passive screeners based on price earning ratio, price to book value, and dividend yield. And contrarian investing. This is my favorite, because going against the market, you will always find a value stock and stocks with strong negative overreactions in the current scenario. Right now, what are those? Maybe a pharma sector which is having a strong negative reaction, and to a level 2 in FMCG which is having a strong negative reaction. And activist investing, investors looking to turn around poorly managed companies with potential. There are times when large cap become a mid cap, and mid cap aiming to become a large cap. Those are the times it is called as a value pick, value stock pick, and you investing your money. And this is what this Access Value Fund is going to do. And if you look at the value, this is the value style investing in markets. The index is showing only 11.7%, because they are comparing the Nifty 50, and low valuations may not show you the right picture. Also, always show the complete picture, because index is totally different, the top 50 stocks, but this index is going to refer the top 50. And if you look at Nifty 500 value 50 index, it is showing 9.4%, whereas Nifty 50 is showing 11.7. So it means even in Nifty 50, you can find value picks, because the sectors differ at every point of time. Contrarian investing is one thing which I will say strongly say that is what all the mutual fund value investing category belongs to. And and there are times like value traps. You believe in a company, you believe that this is a value stock, you keep investing in it, and for the next 1 or 2 years, this stock will never move. And you should invest at a time when there is a turnaround, when there is so many things are happening fundamentally, and then the stock is moving up because the earnings are moving. So based on that only you should invest, and that is a challenge when you are investing directly in stock market. And this value fund is looking to solve that problem, and that is the reason they are having this particular category of fund. So this is the reason Axis is introducing this Axis Value Fund. And the transition multiples, where it can happen, where from low growth to high growth, cyclical earning changes are happening, price to sales, that is the ratio. That is where when the sales is increasing, the price earning multiples will increase, and overall the earnings is increasing, means automatically the stock price will start reflecting it. So it is a combination of so many things. That is what they're saying. All these things put together, if the stock is good, they are going to invest, and that is the value investing. It's not growth stock. Purely in the next 3 months or 6 months, which stocks will go up, and after 6 months, in the next 3 to 6 months, which are the stocks which will go up. That is where they are going to invest. And there will be value traps, and they are going to focus only on stocks with good quality and company specific triggers, because during cyclicals, when a particular sector is going up, automatically all the related sector stocks companies should also go up, and they will be focusing on companies which is getting new projects, which is earnings are improving. Because if you look at the earnings, that will say the true picture. Is earning multiples increasing quarter on quarter, year on year? That will say whether should you invest in a particular stock, and that will say whether this fund is going to perform or not. And avoiding value trap, it's really difficult as a stock market investor unless you know fundamental analysis. It's a default thing. But when it comes to mutual fund, the returns needs to be shown by the fund manager frequently, at least in 6 months timeline. So that is the reason he will try to avoid value traps. He can exit and invest in some other good fund. So this is a fund philosophy. Based on valuation, they are going to enter. Fundamentally, it should be a good company focusing on return on equity and potential for earnings growth in the long term, not only in the short term, which is in the long term. Because growth stock will start earning immediately, but value stock, it will take some time, and optimal leverage and how the earnings, how the company's capacity, everything is considered, and avoiding value trap and medium to long term focus. It can be re-rating will happen in the 3 months timeline or 6 months timeline. So 1 to 2 years perspective, this may be this is my analysis. It may be called as medium to long term focus. And integrated risk management, what is the risk involved in a particular company? Fundamentally they will be analyzing. And strong management execution capacity, because when there is a change in management, it's a turnaround. It happened with Godrej consumer products, it happened with Wipro. So that is the kind of company this fund is trying to focus. And this is the process, 4-step process, I will say: valuation screening, stock evaluation, portfolio construction, and portfolio monitoring. They are going to do that. And what they are doing: value style focused diversified fund, 20 to 50% in mid and small cap equity, 50 to 80% in large cap equity. That is what they are trying to do it based on this. So it means they are going to have a combination of large, mid, and small cap. It's a flexi cap is totally a different category, and this is a different category. So think about Axis is having a flexi cap, and this is a value investing. So if you have a long term perspective, say more than 4 to 5 years, then this fund is for you. You can start your SIP. This fund is for capturing the long-term appreciation of stocks which have the potential to improve and re-rate. So this is best for minimum 5 plus years, and for maybe for a long term. And I love this play, a contrarian and value strategy. I always go with in my stock market. This is a strategy I will go with, and not for people who are playing a highly levered, beaten down stocks, investing in deep value stocks for short plays. Because in the long term all these will work, but in the short term it may not work. So this is not for people who are investing for 1 to 3 years. Anything beyond 4 to 5 years, please go for this fund, or else don't go for it. And why invest? Purely for wealth creation and avoiding value traps, and provide style diversification, because it has large cap, small cap, and mid cap. All three are included in this fund. This is a fund category. They are going to benchmark is S&P BSE 200 true return index. So 200 stocks, out of 200 stocks they are going to find out the value. And minimum application is 5,000 rupees if you are investing lump sum, and in multiples of 1 if you are I think SIP means minimum 1,000 rupees per month. That is what they do. And expense ratio is going to be of almost like 2.25% maximum, and it comes down as and when the stock market, the portfolio size, the AUM, asset under management of this fund is coming increasing beyond 10,000, 20,000 crores, means it will come down less than 2%. And that is normal process. And fund manager Mr. Jinesh Gopani, he's one of the good fund manager, I will say, because Axis has started doing well under his funds. I don't remember the funds, but most of the Axis funds are done extremely well. So I will strongly say, if you have 5 plus years, and if you want to look at investing in a mutual fund right now, if you haven't done investing, so you should go for this Axis value fund. And minimum 5 plus years, remember that. And also SIP, please start. And this is one good thing for long term goals. like retirement or kids education or anything beyond 5+ years, please go for it. Thank you so much for watching. Please share this video with your friends who wants to invest in a value fund and who wants to invest in mutual fund itself. Thank you so much.